Good morning, everyone. It's 6th February 2017, and welcome to this edition of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So let's have a look at the weekly charts first. Let's have a look at the composites. So on Nifty, the monthly VWAP is currently placed at 8695, and it had touched this, it pushed above this micro composite VL of 8770, and then huge sell bar coming in and then consolidating. Whenever it goes below the low of this bar, it's getting some demand and is not able to cross the high of this huge selling bar. So this is a important zone, and above that 8800 is the micro composite VH, and that comes from 4th, 5th and part of the 6th October 2016, and the point of control of that is 8787. So 87878788. So let's assume that 8785 to 8795 would be a important zone to watch, and even this 8800 would be important. Goes into this acceptance and rejects, can be a rejection. Any acceptance above the close is 8754.35, and any acceptance above 8759, which is the HVN or the volume POC of this upper balance, that would be bullish and would keep it attracted into that zone, because there's not much of a volume generation in that range, so it would keep that attracted in that range for some time. Also, let's have a look at the Bank Nifty micro composites. So in Bank Nifty, it has crossed above this value area high of 2150 and has also crossed the gap of 12.9. So extreme bullish scenario. Only thing left is this. If you see this zone, there is this minor consolidation in this zone, so that would be important. So would like to see how it behaves in this zone, and if it's able to push through, then 2465 can be achievable in the coming week. The monthly VWAP is placed at 20,008. So and the VWAP is rising, has almost reached, let's see, so the monthly VWAP of September closed at somewhere around 19,900, and So this is since entire 2016 uh, entire year, and this year 2017 Jan and this Feb, this is the highest VWAP in that range. So if this VWAP is holding on, and that means the prices are being accepted, the volume is getting traded at that average, and till that holds, it will be a bullish case scenario. Now, while we are here, let's have a look at what the sectors did. So, sector wise, IT had dropped to the lowest at one point, went to -5% from the open of the week, and recovered well to close just -0.8 to 1%, which is a very good recovery, a recovery of more than 4% from the lows. And the CNX energy and auto are negative, and rest of the indices are positive, with CNX PSU Bank gaining the highest 6.82% from the open of the week. FMCG 3.74% from the open of the week. And we were watching FMCG. FMCG was turning, it was improving on the sectoral indices relative strength front, and that has given a nice rise of 3.74%. Similarly, I'm expecting IT and pharma to pick up. Pharma has already picked up, has closed at 1.88% from the open. So I'm expecting pharma to still pick up a bit, and expecting CNX metal to cool off a bit, because it has rallied a lot, and this time it has fallen up from the highs it made above 2%. So expecting metals to either consolidate or dip down a bit, a minor correction, to check whether there is any supply left below or not. And CNX energy and auto might also do the same sort of correction. Expecting the small cap index to consolidate or correct. If the small cap index is rising, small cap and the mid cap, which is at 2.85 and 2.55% respectively, if they are consolidating, then chances are less for a breakout in Nifty. If they are breaking out, they are carrying their move forward, then expecting a breakout in Nifty as well. Now let's see what the constituents of Nifty have done. So almost the pharma is Oro Pharma at -4.37, and Infratel the highest loser with -14.98 from the open of the week. Bank of Baroda the highest gainer at 11.34. Bharti Airtel the second highest gainer at 9.30, and then FMCG, ITC, then pharma again, Dr. Reddy, Cipla, again pharma. So pharma rally was led by this two giants, Cipla and Dr. Reddy. So expecting these autos to correct. Tata Motor DVR has already just below the 2%, and Bajaj Auto is below the 1%, just near to the 2%. So expecting that to correct further. Now let's have a look at the projected weekly levels of Nifty and Bank Nifty both. So the projected high in Nifty is 8864, while projected low is 8644. Last week the projected high was 8780, which was not scaled, and the reason being the projected low was hit on the budget day, and chances are less that if only the volatility was huge, then it would have touched the other side. Otherwise, generally it just it either does the projected high or the projected low during the week. For Bank Nifty, The projected high is 20,604 and projected low is 19,908. Bank Nifty didn't do the projected low on the budget day, and that's why it did the projected high. So this is another example that how this projected high and low work. Now let's get into what Nifty did on Friday. So open auction in range, trying to push higher and lower, almost does the IB range in the A period itself. The B period tries to push higher but fails, and then we get a breakdown of the IB in C period, but then an inside bar in D period. E period tries to go above the D period high, fails again. F period is not able to break the lows of C period. So a very choppy move till it finally breaks higher from the from this consolidating zone, and again the spike up is not able to take out the IB high. So basically what it did is it accepted this spike which was created on Thursday, and the value has developed above the fair price of Thursday. So overall a complete balance in this zone. Now not necessary that any balance breakdown or breakout might continue. So the balance rules are that the market breaks out of a balance and fails and goes to the other side of the balance, or breaks out of the balance, stays there and accelerates on that breakout side. So need to watch what it does outside of this balance and then trade that accordingly. We'll see the expectation in the Renko, but meanwhile let's have a look at the 1 minute. So a channeled move up, if you can see this, a nice channel move up, break from that channel, and then if you can see this, a nice balance forming, break of that balance, again a channeled move up, again break of that, again a channeled move up, and finally again a channeled move up. So if you don't consider these up moves, then this has a channeled move down as well, and this has a minor channeled move down as well. So basically that was what was happening. A stopping volume at the lows, and then all the lows coming with a test without much supply, with the final low towards after 230 coming with a stopping volume again. So once this stopping volume came and there was no supply in this zone, it was evident that it wants to go up into this balance and check the fair price, and that happened. So we don't need markets are so visual, you just need to mark a zone and the midpoint of that zone, and that is that's the destination when there is no supply on the lower side. Similarly, when there is supply on this higher side, the destination is initially this, the fair price of this balance which happened, and then you come to a lower balance and you find out the fair price of this balance. So that's the way a normal auction behaves. Let's have a look at the 15-minute. Buyers getting stuck at the highs, normal scenario happening every day. Huge sellers coming into this fall, but see how the supply is absorbed. Then whenever it comes down, there is no supply at all. See how entire supply was absorbed. Finally, again in the going into the highs, there was a bit of selling, and again when it comes down, all the supply is absorbed. So it actually like created a kind of demand supply zone between this area. Let us So whenever it goes into this zone, gets supply. Whenever it comes into this zone, gets demand. So essentially it was like just rotating between the fib numbers. Now let's have a look at the Renko. So after this, the fair price is here. The HVN of Thursday, lending that support. Also, the day mid was there. So not much of trading below the day mid, and also the pivot was there. So again and again coming and taking support there. Impulsive move down. So this is a symmetric move up. Impulse, pull back, impulse, pull back, impulse. Reverses from this HVN, and then again an impulse, pullback, impulse. The move is done, gets very messy, and again when you are going out of this mess after pushing down, if you don't get anything, and when you are going out of this mess, that is a sign that you will again get an impulsive move. So impulse, pullback, impulse, pullback, impulse, and then this impulse does not continue because it has pushed through this mid. You see how that happens is it pushes through the mid, comes back to the mid, and goes into an impulse. That is the move which I like, which is tradable, and which I prefer to trade. Now, not necessary that everybody trades in the same way, but these moves are like easier to play during the day, and give a better scenario of the likely targets. So now let's have a look at the hypothesis for today. Now, based on the SGX, the SGX was trading 8790 something. So in case it opens here, then let's begin with that, because that's what we have as a reference. So let's draw there, and let's draw a line at the highs, so that we can just create a scenario. Now the open can be somewhere here, the open can be somewhere here, the open can be somewhere here. So depending on that, we'll continue. So what I'm expecting is opens here, tries to push above, fails, comes into the 8770 zone, again tries to push back up, fails, and tries to come into the 8754. If it gets any supply into this zone, then it might not pull back. Instead of that, continue its move down and break the low and check into this. So check below the low, break the low, check. If it doesn't get any supply and rather gets demand, then push back up. Otherwise, push into the 8690 kind of zone. So that is what I'm expecting, depending on what it does at this level, what it does at this level. Suppose if it opens and directly in the open it can get the first demand here, then I'm expecting it to push higher, push through the 8800, test it back, and then carry its move up above 8800 and go to 8840 kind of zone. Suppose if it fails from here as well, then again continue with this move. Again, if it gets demand here, then again push back up above the high, above the previous week high, come back and make its move into the open. So that is the likely scenario. Now let's have a look at Bank Nifty profile first. So open auction in the range just below the point of control at the HVN of Thursday, pushes above that and enters into this balance. If you can see, there was a balance higher. So a distribution is there, with though there are dual prints, but this is a balance, and pushes above that in the A period. B period also pushes above that, establishes the IB just below the previous day's high, and then C period pullback is not able to push through the, see, this is the range also and value area high. Now people are so used to, once they read about market profile, instead of the highs and lows, the mechanical level for them becomes the VL, VH and POC. VL, VH and POC are not the levels to watch for trades. This is a structure. You are watching a structure where the VAL is defining the lower band of the 70% of the time taken in a particular range, and the VH is defining the higher band of that. So it is not a precise level to be looked at. We need to see what is there, what kind of structure is there at that level. So this C period pushing into this is actually pushing into this range, and because it was this line was dividing this distribution, so this entire zone becomes a demand zone. So it comes into that, fails, then the objective is to go and break the high. Now the way it broke the high was with volume. So if you can see this, so once it creates that volume, it can a pullback needs to push through this. Till it doesn't push through this, chances are that it will keep on making higher highs, and that happens. L period push into the HV and doesn't get anything, and then again it pushes back up to make another high and then close just off the highs of the day. So that is how it has behaved. It's entering a huge territory where it had got supply earlier, but now depends, if the supply is not able to overcome the demand, then it will keep on marching further higher. Now on the 1 minute chart, you can see a channel move down and a channel move up earlier, so or a rising wedge. So that breakdown comes into the previous day's demand zone. So this was, now what happens is, again the same thing happens. You look at the VH, but there are multiple things working in that zone. And also that time I am interested, okay, there is order flow, the buyers were coming into this fall, but as it reaches here, they are not so confident. So what it does is goes sideways and makes a balance. Now this is the fair price. What happens is it pushes down. Now where does it come? Into this balance. If you see, there is a balance here with the fair price here. Now I don't need to even I'm just drawing visually, and see the lows are coming into that zone. No supply here, if you can see. Then again no demand when it goes higher. Finally when it breaches that, the no demand is breached and pushes through this supply as well. So it's accepting this balance. So likely scenario is it will push through the highs. It pushes through the high, creates a thrust, tests it and tries to push back in. Now where does it have to push? It has to push beyond this. Till it doesn't push beyond this demand area, the chances are that it will keep on going higher. So again creates a balance here, overall balance with the fair price here. See, once it breaks that, comes back down, goes into the fair price again, pushes back down and closes at the highest fairest price. So that is how the intraday balances behave. And see, the amount of selling coming into this, rise is huge, and that's why this fall. And then instantly the selling is absorbed, and then the buyers coming into this. So that's what had happened on the 1 minute. Now on the 15 minutes, again the usual sort of scenario. buyers getting emotional, going into the highs, comes back in. But here you get absorption as well as a bit of buying, pushes into the supply again but fails, comes back down again, absorption. This absorption finally leads to the highs, huge selling coming in into the highs, a thrust and huge selling coming in into the highs, but finally getting absorbed once it comes into this zone. So now let's have a look at the Renko. So impulse up, pull back, impulse, a bit messy, again pull back, messy up, pull back, messy up, comes in a very choppy move down into the day mid. A failure at day mid is a buying opportunity due to this, and the likely target, again the same thing, the same fundamental. So likely target is going into this, creates a zipper there. That means whenever it's breaking down, coming into this zone, again trying to push back, is a buy for breaking out of the highs. Now it breaks out of the highs with an impulse, goes sideways, pull back, comes into this. What do? Simple, we buy again for a push, a similar kind of impulse from here. What it rather did is again went sideways into the same zone and then finally a push. So this and this generally becomes equal. Again a failure there. This is considered, so again you get a letter M here, and we know what happens with that. It pushes down. And where can it push down? Either the fair price where the highest volume is traded, or the day mid, or the VWAP, either of them. Again push back up into this, retrace back, and an impulse up. So now this impulse up is huge. I would expect only till here. So that's what had happened. Now today's scenario, let's discuss. Expecting, suppose let's draw a line at maybe above 350, 20,350. So if it opens there, then push down, again pull back up, push down into the highs. So we need to draw a line here, push into this, reject and continue its move higher into the open, or suppose if it opens here, suppose if it opens here. So you have these data points. This is I'm just visualizing how it can behave if it wants to go up. So I would expect that it opens gap up, fails, comes back down, or opens flat, tries to push up, fails, and comes into the range. So suppose if it's not pulling back here, then I'm expecting it to go into this zone, pull back, fail, come into this zone again, and again try to push back up. And then what happens is you continue with this move. So this would be continued like that, the same thing duplicated here. And if it accepts into this zone, then I'm expecting it to push lower, pull back up, and then go and break the 20,050 kind of zone and take support into the 19,990 to check the monthly VWAP. And that's where we'll decide whether it wants to push back up into the range or does it want to continue its move down. So that is what I'm expecting in Bank Nifty. So that's it. I think that's it for today's Traders Digest, and catch you all in the room. Have a profitable trading week ahead. Thanks for watching again.